Welcome to the program. Today we'll talk about what's happening on global financial markets. We'll look at earnings season, BHP, CSL, JB Hi-Fi and more. And that's what we'll talk about today. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
Pete, markets still holding strong. Earnings season pretty positive so far. Your thoughts on what's happening at the moment?
It's 50-50, or maybe it's 60-40 to the good side. I'm really happy with what I'm seeing. The BHP story was, what we expected. But looking at the companies that are doing well are industrial companies. I think that's a good sign for the economy.
Paul, your take on what we're seeing at the moment?
Yeah, I'm probably not as positive as Peter. I think there haven't really been too many shockers, and there haven't been a lot of standouts. I mean, obviously the JB Hi-Fi result was pretty good, but that's a great company. And I think CSL this morning's also come in okay, particularly with this forecast. So there's some good stuff out there, but there haven't been. I think you can count them on your hand almost, and there aren't too many really bad ones.
I think the positive though, I guess, from a retail perspective was, and we did actually see, and even from a business perspective, some top line growth from JB Hi-Fi, 9% sales growth, and it has been a cost out story. That's got to be a positive for consumer confidence. The settings are good for retail environment, low oil prices, low interest rates. Do you guys see that as a positive?
Yeah, I think JB Hi-Fi would benefit from the death of poor old Dick Smith. That helped them. But
Harvey Norman result will be important now to determine
for
how the retailers are going.
Yeah, but to me, what we're seeing is Domino's yesterday. It was a 28% increase in profit, and the market marked it down. But its share price was up 33% this year. I think about 80% for the whole financial year. So the market really blew them out of proportion of how good they are. But this is a good company, and it's doing pretty well.
Yeah, I mean, the good companies are doing okay. I mean, so JB Hi-Fi's in the good company category.
Yeah.
It's consistently outdone market over the last couple of years.
Give us the cream of the crop.
Challenger again yesterday.
Probably disappointed.
Beat market expectations. CSL today, I think, has done okay. BHP and Rio are pretty much as expected. Domino's also has done okay. But the banks have been a touch disappointing. Yeah. I think they're not doing enough, and I thought NAB's third quarter result on Monday was a bit on the weak side. But
again, the market went up?
But the market went up. I mean, the market's got no reason to sell it. The fundies, I think, are still short. And when you're getting the US reaching triple highs for the trifecta since the first time or second time since 1999, it's very hard for the Australian market to sell off. So earnings is okay. It's just not. It's not shooting the lights out, but the markets.
Let's talk about a couple of the specific companies. So BHP, Paul, your thoughts on that result yesterday? To be expected. BHP actually went up yesterday.
Yeah, I think BHP. It's done a lot of work. I mean, it's a little better than expected in terms of its underlying result. I think they're feeling not confident about the outlook, but perhaps feeling that the worst is over for commodities. And I think you've got to be a little bit careful with that view. I mean, they say that they've taken, like Rio, they've both taken a lot of cost out, and the cash flow is now being generated. So, that's why BHP's recovered. But it did dip, if you recall, to under $14. It's over 20. So it's had a 40% bounce this year. People forget just how much this thing was out of demand back in February.
And iron ore prices actually are at a 3.5 months highs at the moment, but they do. McKinsey did sort of indicate that they're looking like heading towards 50. Or that's how they're pricing their models, and some analysts have even talked about them going back towards 35 once the Chinese stimulus goes off. So there's a lot of risk there for the miners.
I think both BHP and Rio are both conservative in their forecast at the moment, and I think that's a good thing. I mean, I think
they're in the government forecast.
Yeah, well, I think they've done some good work. I just think that not sure that you can yet say that they're bottom, but in weakness, they're probably a long-term buy.
The best explanation of what that terrible loss, 8.3 billion in Australian dollars, 6.3 or something in US dollars, is look at it this way: you buy yourself a house, it goes up in value because of a big boom, and then the boom goes off the boil. So you have a $3 million house is now worth a $2 million house because the boom's come off the boil. That's been written off, and so that's created a lot of that profit. The company itself its underlying profits gone from 6 billion down to 1 billion, but we know commodity prices have been crushed. The company's probably in a good position going forward, I think.
Yeah, I mean, I think there's probably a little bit of a debrief required on the disaster investment in oil and gas in the US. I mean, they've written off something like $35 or $37 billion. So probably still some heads should roll at board level at BHP, right? Not necessarily with the current management team.
No, McKenzie is cutting costs.
Yeah, McKenzie is cutting costs,
but
I just hope BHP doesn't go on the acquisition trail. I mean, I just think it needs to focus on what it's doing, and I think it's probably a good stock for long term for your portfolio. But if it was start to go around buying stuff again, I'd probably be a bit worried with the current board in place.
Yeah. So far, report card, Paul, on earnings season.
Look, I'd give it a pass.
Yep.
I think expectations are low. I don't think, as I said, I haven't seen a lot of really bad results. I haven't seen that many that have really beaten the lights out. But the better companies, the stronger companies, with the exception of the banks, are doing okay.
Pete, you're a former university lecturer. What sort of report card would you give it so far? And also, what have the outlook statements been saying?
Look, to my way of thinking, there's nothing that worries me about the rest of this year for stocks. There could be a pullback, and I'll be a buyer in any pullback.
Not worried about Trump?
No, not worried about Trump. He's dead in the water, thank God.
So we'll just write that one down.
Yeah,
Trump is dead in the water. Peter Switzer on this date.
And I'll be dancing on his grave as well. But the thing is this, the election years are great for the stock market. You know, in the last 7 months of a stock market year when there's an election on, very good for stocks. And I think that it sets us up for a nice finish of the year. I really hope Trump loses. If Trump wins, it would probably rock the market. But once again, there'd be a buying opportunity because US economy and US companies are doing well.
That's all we've got time for today. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.